Hey, what's up, everyone? Today's video will be looking at how our strategy has been working for us. So this will be just like proof, and I'm gonna take you through all the steps on how to use the strategy and how to basically um, protect your accounts from losses and stuff. So my name is Cristhendrix. I'm a trader from Never Broke Again. So right before we start the video, I am going to show you the trade that I took, or the trade I'm currently in right now. So I'm just going to quickly jump to my Google Drive. So you can see we have the Australian dollar against uh, the American dollar. As you can see, I took a buy, and I'll explain why I took this buy and how I saw it. So let's just jump back to our trading view. So this is the pair on the trading view platform, and currently I'm in the daily. I'm not gonna scale it up all the way to weeklies and stuff. So I'm just gonna jump at the top of this one and just look at the current market. So as you can see, well, let me just highlight the area I'm gonna look at currently. So this is our current market, and the first thing that we should do is get our lows and highs. So currently these were our lows, and previously the high was that point. So as you can see, we've been playing around our low, which means the price eventually has to reach the previous high. So with that said, we are going to focus on the next step. Step 2 is getting the structure. So we can see with the current price, we're just gonna quickly get our trendline tool and draw this. So you can see the market had this downtrend or descending structure, considering that this is our resistance of our structure. So you can see we had a descending structure which had basically these two lows right here, call it a double bottom or whatever you want to call it, and we had a series of perhaps 3 touches. Let me just illustrate how those touches were. So this was our first touch to our support, and this is our second touch to our support, and the third one. With the third one, you can see it didn't really reach our trend line being this descending support instead of this one. This is our horizontal line or horizontal ray. So the price, instead of touching the trend line and just rejecting back up, it just rejected on our horizontal ray. You shouldn't freak out like, oh, I can't take this trade because the price didn't reach my trend line. No, it's okay, because there are certain fundamentals about this movement, and that being is this clear double bottom right here. So this formation on its self, it is enough for us to consider this as the third touch, regardless of it touching our trend line, right? So let me just get rid of that. With that said, we had a nice pullback from the support, right? And it formed a huge impulse. Remember, an impulse is the market moves in 2 phases, right? The first phase is the impulse, So I'm not gonna write that down. So what an impulse is basically when the market is it has momentum of a distinct direction, which means it could be a momentum to the downside or momentum to the upside, right? In this case, from this point right here to the downside, this was a momentum to the downside. This was an impulse to the downside. So that is what we mean by when we speak of an impulse. And then a correction is when the price is correcting the huge momentum. So basically, it is when the price doesn't have a distinct direction. So it's kind of like indecisive. It's going sideways rather than in a certain direction. So which means, for instance, we would have our impulse, right? That is the phase impulse when the price has momentum, and then our correction will be when the price doesn't have a direction. So it's basically just going sideways like that. So about these corrections, there's something about these corrections. They anticipate the next impulse, whether it could be an impulse back up or an impulse back down. Your job is to figure out which way the impulse is gonna go to. So that is how we basically base our trades on. For instance, we had this correction right here. Right after a huge impulse from this point. So you can see we had an impulse, correction. I'm going to go into depth about these corrections. So correction, the next anticipated move was a continuation of the initial impulse, which is a downtrend. So we anticipated that move to the downside, and that was our trade. Basically, we traded off the correction, anticipating the impulse, as that is what we profit off from. So with that said, remember 2 phases, impulse, correction. It's quite the basics of the market. And back to our setup. So I'm going to move on from the daily time frame to rather maybe 4 hours to get a nice perspective about what happened. So I'm going to focus on our third touch, as it is the one with the most confluence. So basically, I wouldn't recommend like, okay, let's say this part, the third touch hasn't formed. It's the market. It's still on the third. The second touch is still right here, and all of a sudden you're convinced that, okay, the price, once it rejects at this point, which is our support from the horizontal ray, you are convinced that it's gonna buy, right? So basically, you take your trades from these corrections. Let's say you anticipated a buy from that point, because it's basically a double bottom. Instead of waiting for the third touch, which has more confluence, and it basically poses less risk to trade from it. So that was your anticipation. You went into profit for a while, but then just look at what happened right after. You were in the red for this double bottom on the third touch of our structure, basically. So basically what I'm saying is, rather wait for the third touch instead of going all in just from the second one. The second one, it's okay. In most cases, it works out. Okay, not most cases. Disclaimer. So basically, the third one has more confluence. It's less risky. Okay, with that said, now we have to spot our impulses, corrections, and as you can see, the market was quite choppy. We didn't have a distinct correction. We can see these impulses, but they don't make sense since the corrections themselves don't make sense. So what I did was wait all of this out, and I kept watching the market for like distinct impulses and corrections. So let's just scale down to the 1 hour time frame and maybe zoom. So I'm just gonna go back to our third touch, which was right here. As you can see with this arrow, right? From this point, we didn't have a distinct correction. As you can see, this one tried, but then it kind of sold off. Instead of rejecting right here to the upside, it just broke off, which meant now this correction kind of didn't make sense. So that was out of the picture, and this correction, it's not safe because it's just so narrow. I mean, it's so vertical. You can't really get your hopes up with these kind of corrections, but in most cases they'll work out, some not. As you can see from this one, it went into profit for a while. Let's say you took your trade right there and you anticipated a huge movement to the upside, about 4%, let's say, around there. But then the market just, it was still correcting, but then it went down back up, and your trade probably went back to break even. It probably hit your stop losses if you put them in, if you stop trailing, sell under profit or whatever. So we basically never had a distinct impulse or correction for a while. For I don't know how long this was. Let me just quickly check, get the measuring tool. So I'm just gonna measure from that point till right there. That is about 20 days. 20 days, yeah, 20 days, 21 days. So it was almost a month just waiting for that to play out. But then just a day or 2 days ago, we got something so interesting, something that was distinct and easy to spot out. So let me just show you what I'm saying. Look at from this point right here. Look at this. From here, you can see we had a relatively flat correction right there, with decent touches, and now we're having an impulse, correction, impulse, right? You see that. So let me just put that aside. And so basically with the correction, we still base off a trade or from the third touch. So basically that's the first touch, second touch, hold on, second touch right there, and the third one, and that's where I took my trade. So how that looks with the real market. That was my support, resistance. Okay, I can just zoom in. As you can see, we have 1, 2, 3 touches, so you don't really have to extend that all the way there, but you can see we have a very clear correction right here with a series of 3 touches. And ever since we've been in the green, it's about just over 1%, 1.5% basically. And I'm not sure if I'm gonna hold this one for that long, but let me just show you the depth of the profit area by scaling back up to the 4-hour time frame. If we go by the 90% rule of our structure, which is this point, for those who didn't know, that is about just over 4%, but they like right here it would make sense to hold till that point and then get out. But then remember, this is not where the price will turn. It has the potential to reach this resistance, so that is a huge movement to the upside. This could potentially be a new trend, a change of trend, because from this point to our structure it was a downtrend, and now we could be looking at an uptrend. Remember, considering what's been happening with the world and the war and everything, you should look at how these countries are affected by these situations. Australian dollar, which is from Australia, obviously, it has deep ties with the EU, but EU is its third largest trade partner. The first one, because Australia, it is part of it's aligned with Asia and so on, like in terms of like the region and the location. So the biggest export or trade partner with Australia, it is China and Japan. I think the first one is Japan and then China, and the third one is the EU with the trade relation partnership and negotiations. So Australia, it gets its crude oil from Asia, which is relatively not affected by the war. So the prices, domestic prices of their products, they're not likely to go up that much, because the pricing of the crude oil from Russia or the EU, they don't make that much impact in Australia, because it gets its crude oil rather from Asia, which is far away from from the war. So I think that is one thing that will influence the price to go back up, and from an uptrend during this whole situation of the war. Um, yeah, that is the update. So basically, this video, the purpose of the video is to show you how our strategy works and to prove to you how it's been working. As you can see, I took this trade in real life on a live account, and this was my trade. As you can see, this is the correction with the 1 2 3 touch. This is the third touch that I entered, took the trade there, and I've been holding since. So I'll probably post updates about this one. And what I like about this trade, it is backed up by the fundamentals of the war, so it's quite easy to tell like what's going to influence the price to go up, which in this case it is the crude oil, because the crude oil is the foundation of domestic prices in every country in the world. When crude oil prices go up, prices of literally any product in the economy goes up, because crude oil is refined to things like fuel, and transportation needs fuel. How your product gets to your door, that is fuel. How the retailers get the stock by trucks, that is fuel. So there's just so much fuel driven products which make up literally the entire economy. So with Australia, it is fortunate enough that its all supplies come from Asia instead of the EU, although they have kind of like deep ties with the EU. So that is today's update. Thank you so much for watching till the end, and just look out for more videos. Make sure you subscribe, like, and share. This was Cristhendrix once again.